Okay, what's up everyone? This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And of course, today is Friday, so you know what that means. I put together here another live option trading video that will show you all the trades and all the adjustments I made over this past trading week and in real time. And there's definitely a lot for me to show you in this video. I put on a new trade in EWZ once again. This is a very standard short option position. And then also I played some earnings this week, one in CROX, another in NUE, and then one more in Snapchat, which unfortunately you can no longer see here because that trade totally blew up last night. Or I should say after hours when the figures actually came out and the stock dropped by about 30%. So towards the end of this video, you're going to see how I managed that terrible position. Now, as always, before we get started here, in case you are brand new to the channel, I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading and stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Okay, so with that being said, I'm going to stop here and play a few clips that I recorded from this past week that will show you in real time the new trades I put on over the past couple days here. And I believe we're going to start off here by showing you how I took my profits in my Kohl's short put position earlier this week. So let's get started. All right, today is Monday, October 18th, and just one thing I want to show you this morning. I did take off my Kohl's position for a nice profit. And in case you have not seen my previous live option trading videos, this trade here started out as simply a short naked put position. So this order here that got executed automatically earlier this morning was set to buy back both contracts of the 42.5 strike put options that I sold, I believe, maybe 2 or 3 weeks ago. And so if we come to the charts tab now, and I already have Kohl's pulled up, so let's zoom in a bit here. So this line in red, this was the support level I drew in, which I thought would hold for quite some time after Kohl's did drop by a huge amount one morning. So in particular, it was on this day right here after this massive down move where I did draw in this red support level. I thought it was pretty significant, and this stock definitely did bounce off that point for a couple days. So for a while after I sold those puts at this point here, I was making some money, but I never did quite reach my profit target. And unfortunately, this stock did turn around, go a lot lower, and force me to be in the trade for a lot longer than I expected to. But that being said, Kohl's is finally bouncing back and is now currently back above that support level, pretty much right around the same price as when I sold those puts to begin with. Moreover, as you can see down here with the implied volatility chart, it does not seem that implied volatility for Kohl's has moved very much. So as expected, after a big down move in the stock price so suddenly, we did see a nice spike in implied volatility, a nice spike in the prices of the options, which is one of the reasons why I sold those puts to begin with. And again, the IV really has not gone anywhere since then. It is a bit lower by maybe 2 or 3%, but definitely not by much. So that leads me to believe that the majority of my profits on this position now simply had to do with time decay. And that's one of the very cool things that comes with selling options. Time decay is always on your side. It's always working for you. And so that allows you to sell options. And if the stock price ends up just going nowhere, obviously the price will fluctuate across time. But like I was saying, Kohl's is pretty much back at the same price as where it was when I sold those puts to begin with. But because 2 or 3 weeks passed by and time decay was able to eat away at the value of those put options I sold, that's why this morning I was able to buy back those puts for a much lower price. So in particular, when I sold those puts a while ago, I sold each one for a price of $214 per contract. And after 2 or 3 weeks of time decay, the price has gotten cut in half. And that's where my automatic GTC buying order was set in place to buy these puts back at, for half price. So very cool. Now that I'm out of my Kohl's position, that leaves me with just one single position left on in my portfolio in GDXJ. This one here is a short strangle where I'm still short the 37 strike put and also the 44 strike call. So I'm definitely under allocated in my portfolio here, but this is intentional because earnings are very close now. In fact, there's a lot of great earnings trades coming up, I believe, on Wednesday and Thursday. And all those stocks have very high implied volatility, very juicy option prices. And with all the available capital I now have in my account, I will certainly be able to take advantage of all those opportunities. So stay tuned for that. All right, today is Wednesday, October 20th, and the stock I'm looking at here is CROX Incorporated. So as you may know, this company manufactures and sells those lovely looking sandals, and they are also announcing earnings tomorrow morning pre-market. So that means if I want to trade this earnings announcement, I do have to put my trade on today before the market closes. Now, as you can see down here with the implied volatility chart, we are seeing a pretty nice expansion prior to this earnings announcement. There we go. So currently the IV for this stock is hovering just above 60%, which is pretty high for a stock that's actually moderately expensive. Right at the moment, you can see here, CROX is trading for about $136 per share. So again, seeing an implied volatility of over 60% for a stock that's over $100 per share is not that common. And then down over here, the implied volatility level corresponds to an IV rank of 50%. That's very good. And also an IV percentile of 82%. That's extremely good. So basically what this means is the implied volatility right now for CROX is on the very, very high end of where it has been over the past 1 year. And you can also tell that just by looking at this chart visually, right? Clearly an IV of 60% is much higher than the majority of days that the implied volatility has been at over the past 12 months or so. And as with most earnings trades, this expansion of implied volatility leading up to the announcement, this expansion of uncertainty about the company's future prospects, this makes for a very advantageous point to start selling option contracts, right? Because as I've explained in many of my previous videos, when implied volatility expands like this, so will the prices of the options. And you always want to sell something when it's at the most expensive price point. And then come tomorrow, once these earnings figures are announced and everybody knows what's going on with CROX, all that uncertainty will go out the window. So at that point, I would expect to see a huge crush in the implied volatility soon after, which also translates into a huge crush of the option prices. So the full picture here is selling options at this point when they have high prices and then buying those contracts back later down the road once they have much lower prices and then making the difference as your profit. So at this point, let's come over to the trade tab and take a look at the option chain on CROX. As you can see here, I am in the November expiration cycle with 30 days left to go. And then down here in blue, these are the options I'm currently looking at selling. Specifically the 120 strike put option, and alongside that, also the 160 strike call option. So this would be a delta neutral short strangle because the delta on the put option of 20 is the exact same as the delta on the call option over here. And this is oftentimes what I like to do with earnings trades. I don't like to pick a direction. I'm simply banking on the stock moving either up or down less than what is expected. And what is that expected amount? Well, you can see that right up here in yellow. So this here is the 1 day, the 24-hour expected move of CROX stock based on the current levels of implied volatility. So over the course of this earnings announcement, right now the market is saying it expects CROX stock to move either up or down by about $13 per share. Now, in my experience, having played earnings many times before, the vast majority of the time, the stock actually moves less than what is expected. And especially in those situations, that's when you will see the biggest crush of implied volatility thereafter, and also the biggest crush of the option prices. Of course, on rare occasions, the stock can move well beyond what is expected. I have experienced those situations before, and that's where having good defense mechanics is very, very crucial. And my first line of defense on this trade here is selling options with strikes that are a bit beyond the expected move. So right now with CROX trading at $136 per share, if this stock were to move down by the expected amount, $13, that would put the stock at a price of about $123. So again, that's why I'm selling the 120 strike put option to be a bit further away and give myself a little bit more cushion. And then on the upside, if this stock moves up by $13, that would put it at a price of around $149. So therefore, selling the 160 strike call option puts me way far away on the upside, and I do prefer to be further away on the call side because sometimes when stocks have good earnings, they can really, really explode. Especially with this stock, right? If we come back to the charts real quick here, you can see in the previous earnings announcement, which happened right around late July, this stock did gap up quite a bit. There we go. You can see it right here. So a very big gap move higher. And then also if you go to the announcement before that, same exact thing. Another pretty big gap move higher. So again, just to be extra cautious on the call side, I do want my strike to be extra far away. So with that said, let's come back to the trade tab here and make this trade official. We'll go ahead and right click on the call option, go to sell, and then, there we go, then go to strangle. And that brings up the order down here. So I'm going to sell one contract of the 160 strike call option, and then also at the same time, sell one more contract of the 120 strike put option. There we go. And the total credit I will receive for putting on the strangle is going to be $530, somewhere around there. And that's definitely pretty darn good. So we'll go to confirm and send. Buying power effect is $1,300. That's totally fine. And we'll go to send. And there we go. Just got filled at exactly 530. Awesome. And then as usual, the last step is to set up my automatic buying order to buy these contracts back if I am correct on this trade, or if I can make a profit. So down here, buy back one contract of the 160 strike call option, and then buy back one contract of the 120 strike put, and I'll buy back these contracts for half price. So half of 530 is 265. And then lastly, we'll make this a GTC order so it's always in place, and then confirm and send, all done. Now there is also one more stock I do want to play for earnings. Let's come over to NUE now. If you have watched my recent live trading videos, then you will have seen this stock before. I just closed out on my existing position on the stock about 1 week ago or so, and now I'm ready to put on a new one. So just like with CROX, this stock is announcing earnings tomorrow morning as well, pre-market. And down here with the implied volatility chart, it is looking very, very good. So right now the actual value for the implied volatility is hovering around 47%. That's pretty good for a stock trading over $100 per share. And this translates to an IV rank of 63%. That's awesome. And then also an IV percentile of 90%. That's very, very high. So needless to say, the implied volatility for the stock is definitely pumped up for the time being. So I would expect come tomorrow, once these earnings figures are released, we should see a pretty large crush in the implied volatility. And as long as the stock does not move too much in price, that would make for very nice and quick profits. So with that said, we'll come over to the trade tab here and take a look at the 1-day expected move for NUE. Right now, the expected 24-hour move is up or down by about $3.78. I'll round up and call it $4. So that means I want my put strike to be at least below $101 per share, or 101.50, and then also above 109.50. So coming down here to the puts first, I think I'm going to sell the 97 strike put option. This has a 24 delta and definitely has some more baked in cushion with the strike price being 97 and not 101.50. And then over here on the call side, because also in this trade I'm looking to be delta neutral or directionless, I'm therefore going to pick the 116 strike call option. Also has about a 24 delta, 25 in this case. And again, with the strike being 116, this is well beyond the expected 1-day move. So certainly also some very nice built-in cushion on the call side. So with that said, let's come over here and right click on the call option and go to sell and then strangle one more time. Down here is the order, sell one contract of the 116 strike call, sell one contract of the 97 strike put option, which would be right there. And the total credit on this position is going to be about $400. That's pretty nice. And then finally, we'll come to confirm and send. Buying power effect is about $1,300 again. That's totally fine. So we'll go to send. And no fills yet. So let's come back to the monitor tab and see what's going on. Down here is my order. And you can see both my limit price and also the mark price for this position are exactly the same. But since I'm not yet filled, I'll come down a few more bucks in my own price. So we'll go to cancel and replace. And perhaps I'll come down to maybe $3.95. Let's see what happens here. And there we go. Just got filled at $3.95. Pretty good. And then finally, you know the drill. I'm going to set up my buying order as well on this position here. So go to strangle, and then we'll configure down here the buying order. So the 116 strike call is already there. And then also I'm going to buy back the 97 strike put option, and I'll do so for half price. So half of 395 is about 197. I'll come down to 195, or oops, there we go, 195. And then make it a GTC order, confirm and send, all done. So now I'm locked into my CROX earnings trade and then also my NUE earnings trade as well. And also I forgot to mention NUE is Nucor Corporation. This company is involved in the production of steel products. So with that said, now I just have to wait until tomorrow morning, see what these earnings figures are, and then of course wait to see how the stock reacts. All right, today is Thursday, October 21st, and the first trade I'm going to make here today is in EWZ once again. This is an ETF that tracks the Brazilian equity markets, and I do like trading this ETF quite a bit because it tends to be pretty volatile. So of course, that also means down here with the implied volatility chart, because this is a rather volatile ETF, that means the implied volatility also tends to be pretty high, at least compared to most ETFs. So right now, the implied volatility level for EWZ is right around 40%. And so far, as you can see here on the chart, we are seeing a pretty nice spike in the implied volatility, most likely due to the fact that this ETF is down pretty hard today. You can see that right here. So EWZ has been in a downtrend for quite some time. And I do think right now, the price of this ETF is at a pretty interesting level. So I'll zoom back out here really quickly. And let me go to my drawing tools, and then we'll go to the trend line one here. So I'm going to go ahead and draw in a support level right around this price, about $30.50 or so. So right around there. And then I'll go back and switch my tools back to the regular cursor. And here we go. So you can see there were two major points in the past where EWZ got down to this price point, and then it bounced very hard off that level. The first time was right here back in mid-November of 2020, and then the second time was right around here back in early March. And actually there was a couple times where EWZ bounced off that support level. So once more, look where this ETF is down to again. It's exactly touching that support level for the third time. And so far, it is looking like it is backing off that support level from the lows of this morning. So we'll see what happens here. Support levels are made to be broken at some point, but in terms of waiting for a good time to potentially buy into this ETF and hopefully see a short-term bounce, I think now is a pretty darn good time to do so. Especially when you look at this downtrend here, after a big down move, we usually see a pretty nice short-term bounce. Big down move, short-term bounce, big down move, short-term bounce, again and again and again. So again, I do think the odds favor another bounce right around this level. And so as a result, I'm going to go to the trade tab here and sell some put options on EWZ. I'm still in the November expiration cycle with 29 days left to go. And I'm thinking of selling the 30 strike put options with a 40 delta. So this is going to be a pretty bullish position. I don't want to go to the 30.5 strike because this is a bit too close to the current price of EWZ. And then I also don't want to go to the 29 strike because these options are not trading for that much in premium. So the 30 strikes I think are a very nice happy medium. So I'll go ahead and click on the bid here, and that brings up the sell order down below. I'm going to sell 3 of these contracts, and we'll see if I can get filled around $102 per contract. So that would bring my total credit to just above $300. So that looks good. Go to confirm and send. Buying power effect is $1,600. That's a bit high, but not too crazy. So I'll go ahead and click send. And there we go. Just got filled at 103 actually. Very nice. And so if you have seen my previous live option trading videos, then you will have seen a very similar position I put on in EWZ a while ago. I believe if we come back to the charts real quick here, it was around this time where I sold some more naked puts on this ETF. And of course, we did see that short-term bounce, but it wasn't enough to hit my profit target. And then this ETF just kind of unraveled from that point thereafter. That being said, I was still able to make a profit on that position, a profit on those naked puts because I shorted the full amount of shares of this ETF once it breached my put strike. And then I did also make some adjustments as well by selling some call options against those puts, etc. So point being is I will do all that same stuff again if I'm directionally wrong on this trade once more. So basically, if the support level here, if the support level breaks and EWZ continues to go lower, once it breaches my put strike, I'll short 300 shares of this ETF and then make any further adjustments to the position if I need to. And actually, one more thing I forgot to do here is we'll come back to the trade tab, and I need to set up my buying orders to buy these contracts back should I be correct on this trade. So here we go. Down here is the buy order to buy back all 3 contracts, 30 strike put options, and I'll do so. I'll buy them back for half price. So half of 103 is about 51. I'll come down to 50, make it a nice round number, and see if I can squeeze out a few extra bucks in profit, make it a GTC order, and then confirm and send. All done. Okay, here I am again, still on the same day, Thursday, October 21st, just a few hours after I put on that EWZ position. And so now the stock I'm looking at here is Snapchat. I'm sure you've heard of that one. And this company is announcing earnings after the market closes today. So that's why I wanted to wait a few more hours until we got closer to the end of today, because when I do trade earnings, I do like to make my trade as close as possible to the actual earnings announcement. And in that way, I can capture any remaining spike in implied volatility, which you can see down here. And so right now, at least, it does not look like we're seeing any additional spike in implied volatility today, but the implied volatility for Snapchat is still pretty elevated overall, right? Currently, the IV is sitting at a value of about 62.6%, and that translates to an IV rank of 25%, not bad, and an IV percentile of 55%, still not bad. But as you can also see up here on the price action chart, these are the previous earnings announcements that occurred, and every single time you will notice on the implied volatility chart that once those earnings figures came out, we saw a huge crush in the implied volatility. So even though the IV right now is not super high compared to the past, I still expect to see a very nice crush come tomorrow. So with that said, we'll come over to the trade tab now and take a look at the 1-day expected move for Snapchat. Right now it's saying over this earnings announcement, the expected move is about up or down by $7 or so. So therefore, I want to pick my strikes at least $7 away from their current trading price of 75. So on the downside, that puts my put strike at least to 68. And then on the upside, that puts my call strike to at least 82. Now this stock has blown me out to the upside a couple times, so I do want to place my call strike as far away as I can while still collecting decent credit. So that's why I'm picking here the 87 strike call option. This one is a full $12 away from the current stock price, almost 2 times the expected move. And you can see over here, this call option has a 23 delta, and I do also want to be delta neutral on this short strangle I'm about to sell. So that means coming over to the put side, that's why I'm going to sell the 67 strike put option, also with a 23 delta. And the strike, of course, is just ever so slightly beyond the expected move. So not too much cushion on the downside, but definitely a lot of extra cushion on the upside. So I like what I see here, and therefore we'll go ahead and right click on the call option and go to sell and then strangle. And of course that brings up the sell order down below, sell 1 contract, 87 strike call option, and then at the same time sell 1 contract of the 67 strike put option right there. Total credit is going to be about $347, somewhere around there. And that's definitely good enough for me given the current price of Snapchat at around $75 per share. So finally, we'll go to confirm and send. Buying power effect is about $750. That's fine. So we'll go to send. And there we go. Just got filled at $347. Very nice. And then once again, lastly, we'll set up the buying order to buy back these contracts should I be profitable on this position. So go to buy and then strangle. And then here we go, buy back 1 contract, 87 strike call, and then also the 67 strike put option. Perfect. And I'll buy these contracts back for half price, should they ever fall to that price. So half of 347 is about 173. I'll come down to 170. And then lastly, make it a GTC order, confirm and send, all done with Snapchat earnings trade. And actually, I almost forgot to show you. Let's take a look at NUE and CROX as well, because as you saw, I did put on some earnings trades for those companies too. So we'll check out NUE. And right now this trade is looking pretty good. This stock is down by about $4.50, pretty much right around the expected move. And then also we're seeing a decent contraction in implied volatility, although there's plenty of more room to go on this one here. And so as a result of all that, we'll come back to the monitor tab and take a look. Here's my NUE position. And so far, I'm up about $35 today, which equates to being up overall in the position by about $25. Looks like I was down on this one by about 10 going into the close of yesterday's market. And then for CROX, which you can see right here, this position is looking a lot better. So right now overall on this position, I am up by about $112 or so. And that's because I believe this stock is well within the expected move. Let's go to CROX. And here we go. As you can see, this stock is up by about $11.50. So yes, it definitely is within the expected move, but not by that much. However, we are seeing a huge contraction in the implied volatility. So this is the kind of crush that I typically look for the day after an earnings announcement. Although sometimes, like what you saw with NUE, it can definitely take more time. So I would say mostly because of this huge crush in implied volatility, that's why I'm up by a pretty decent amount on this position just in a few hours. So very good. Now we just have to wait until the market closes today and we'll see how Snapchat has performed over the past quarter. And then obviously we'll see how the stock reacts. Okay, welcome back. I hope you enjoyed those few clips there. And so now let's go over a few things today that I've already done. So starting off first with my Snapchat earnings trade. As I explained earlier in this video, Snapchat, and we'll go to the charts real quick here so you can see this visually. Snapchat unfortunately has plummeted by a huge amount. Look at this, all the way down here from apparently a pretty disappointing earnings announcement. Now the very odd thing here is they actually exceeded their earnings per share expectation. You can see they were expected to announce an earnings per share of minus 10 cents, but they actually came out with positive 17 cents per share. So even though they definitely exceeded their earnings per share expectations, the stock obviously still dropped by about 22% this morning. And in fact, it dropped almost 30% after hours yesterday. So it has bounced back a little bit here. So this definitely proves my point that I've made a couple times in previous videos that there really is no way to predict what a stock will do based on their earnings announcement. There are plenty of times where stocks or companies actually beat expectations and the stock plummets. Or in the opposite fashion, sometimes companies disappoint their earnings and the stock explodes the next day. There's just no way to know what's going to happen. And that's one of the reasons why I typically sell both sides, both a call and a put, because again, I don't care whether the stock goes up or down. I just want it to move within the expected range. And clearly Snapchat moved well beyond the expected range. So ultimately, in cases like this, what I will do is simply close out the entire position. I won't bother shorting stock because there's no point in shorting these shares so far below my put strike of 68, I believe, or 67. Right? Even if I made adjustments to my short strangle by rolling down my call option to take an extra credit, this position would be a loser no matter what. So as you can see back here on the monitor tab, here's the order. I bought back both of those contracts for a debit of $918, which honestly is not as bad as I thought it would be. And so real quick, we'll pull up the calculator here and we'll see what the total losses amounted to. So as you recall from the previous clip, I sold the short strangle in Snapchat for a credit of $347. And this morning, as I just said, I bought it back for a debit of $918. So we'll subtract $918, and therefore that's a loss of $571. Definitely a pretty hefty loss compared to what I'm used to, but ultimately it still only amounts to about 1% of my account. And because, like I explained, there are no adjustments or anything I can do to save this position given how far Snapchat moved, that means your one and only defense for a situation like this, where the stock just moves so far beyond the expected move or so far beyond your short strikes, the one defense you have is, of course, keeping your position size small, right? So as you saw, I just sold one contract, one call, and one put. That's it. And Snapchat stock was trading at the time at around $75 per share. That's a pretty moderately priced stock. It's definitely not a Tesla or an Amazon for sure. My account size can definitely handle this kind of position. And so in that way, even in a worst case situation, the losses are not too bad. Right? I can make this money back in maybe 2 or 3 good trades. That's it. And so with that being said, let's come back to Snapchat real quick here. And I do think this stock, when it reached a low this morning, hit a pretty interesting point. So real quick, we'll go to the drawing tools and go to the trend line one here. Let's draw in a support level right around here, $57.50 or so. And so take a look at what happened back over here in mid-July compared to where the stock is now, or where it reached early this morning. So I don't know, perhaps this could be a decent support level. Perhaps at this point we might see a small bounce in Snapchat stock. I personally do think this stock is grossly oversold given what happened with their earnings. And that opinion is definitely reflected by the RSI indicator down here, right? It's currently at a level of around 27 or 26. That's super, super low. This is basically an indication of how oversold or how overbought a stock might be. And clearly right now, once this indicator crosses below 30, that's an indication that Snapchat here is definitely oversold. Now the implied volatility is a bit low. Obviously with an earnings announcement, you do expect to see a crush in the implied volatility, but my guess is given how much Snapchat moved to the downside, that's why we're not seeing a total collapse in the implied volatility down to maybe 45% or so. So point being here is I'm still willing to step in and put on a new position in Snapchat this morning. So we'll come to the trade tab now and take a look at the option chain, still in the November cycle here. And now I'm just going to sell some naked put options. And so I'm thinking here I'm going to sell 2 of the 55 strike put options for about 225-ish bucks a piece. These options have a 34 delta, so this is going to be a moderately bullish position. And of course, with the strike being 55, this does give me some more cushion to the downside should Snapchat keep going down. So right now with the stock price at around 58 bucks per share, that gives me 3 more bucks to the downside that this stock can move before my put strike even gets tested here. So I like that. And with that being said, we'll go ahead and click on the bid price here. And that brings up the order down below. I'm going to sell 2 of these contracts for, let's try 226 bucks per contract. Go to confirm and send. Buying power effect is about 1,700 bucks, a little bit high, but not too bad. And we'll go to send. And there we go, just got filled at 227. Very nice. So here we go, round 2 with Snapchat here. Hopefully this one actually does work out in my favor. And last step, of course, is to click on the asking price here. We're going to set up the buying order because, again, hopefully I will be correct on this position and I can buy these contracts back for a much lower price. So buy back both contracts and I'll do so for half price. Half of 227 is about 113. I'll come down to 112 because I do like even numbers and make it a GTC order and all done here. So with that being done, we'll come back to the monitor tab and carry on. Now also here, you will notice a few orders I made in my GDXJ position. So let's look at that one next down here. Let me expand this tab. So originally when I first put on this position, I was short the 44 strike call options. That has not changed. And I was also short the 37 strike put options, but I have since moved my strikes, the put strikes, up to the 43 strike. Now, why did I do this? And the reason for it is because I have lost a bit of money on GDXJ from having to repeatedly buy and sell the stock every time it crossed my call strike. So very briefly, we'll come back to the charts and give you a visual sense of what exactly happened, GDXJ. And let me move this stuff down a bit. And I got to change my tools as well and go to the regular cursor and zoom in. So right here, this zone is what I'm talking about. Again, my call strike is right at 44. And so there were multiple days where GDXJ was bouncing through my strike over and over and over again. And every time this ETF bounced above my call strike, I had to buy 200 shares of this ETF in order to cover both of the two contracts I sold. But of course, when GDXJ reverses and goes back down below my call strike, I have to get rid of those shares and do so for a small loss. But when this kind of thing happens many, many times, those small losses can start to add up. Now, as you can see today, GDXJ has shot up significantly. And so once again, I had to buy 200 shares of this ETF. But given the strength of this move, hopefully, GDXJ can just continue moving higher and stay above my call strike. That would be totally fine. But again, because I have lost a bit of money from having to repeatedly buy and sell the stock, that's why I had to move up my put strike. So now my position, as I showed you, is I'm short 2 put option contracts at the 43 strike now, and then still short the same 2 call option contracts at the 44 strike. So I now have on a very narrow short strangle, only $1 wide, and the total amount of additional credit I took in for making this adjustment was, as you can see here, an extra $70 per contract. So because I rolled up 2 put option contracts, my total additional credit was $140. That's pretty nice. And now because of this adjustment, I still have the potential to make a full profit by the November expiration date, which is still about 4 weeks away, or exactly 4 weeks away. And then lastly here, you will also notice a trade I made in EWZ this morning. Unfortunately, this ETF has continued to move lower once again, so I did have to short 300 shares of the ETF. And briefly, we'll come back to the charts and go to EWZ. And so yeah, here you go. Obviously, my support level definitely did not hold because this ETF has just crashed right on through it and kept on going. But that is totally fine. The one thing I don't want to have happen here is for EWZ just to continually bounce through my strike over and over and over again. Even if I'm directionally incorrect on this trade, which clearly I am so far, what I would like to see is simply a clean cut through my put strike and for the ETF to simply keep on going. Because in that way, I'll have to short the shares just 1 or 2 times and lose almost no money in the process. And because I shorted the full 300 shares to cover my obligations on all 3 contracts, then that means theoretically this ETF could go to 0 for all I care, and I can still walk away by the expiration date with a full profit. And that's because as an options seller, you will always get to keep the premium that you sold your contracts for. The short shares simply cancel out any losses I may incur should these put options go in the money and stay in the money. And finally here in this video, let's come back to the monitor tab one more time. And briefly, let's take a look at my CROX position. This one is still within my short strikes, no adjustments here. But if we come to the charts real quick and we go to CROX, I do believe this stock is up by a pretty significant amount today. You can see that right there. So unfortunately, I am losing money on this position today right now because the stock is getting a bit close to my call strike. However, like I said, still within my strikes, nothing to do here. And then lastly, for my NUE position, let's take a look at those charts. And this stock is up by a meager 66 cents today, 70 cents now, and that's great. I would love nothing more than to see this stock just kind of bounce around within my strikes for the next couple of days or even a week or two, because that way with time decay always working in my favor as an option seller, and also if that happened, I would be almost guaranteed to see a contraction in the implied volatility further, and both of those things together would serve to reduce the value of the contracts I sold to the point where I could buy them back for a much lower price and make a nice profit. And with all that being said, that's going to conclude this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.